Hello everyone, I'm Dividend Enjoyer, and today I'm going to be doing an Enbridge stock analysis, ticker symbol ENB. This stock is a pipeline infrastructure stock similar to an Energy Transfer. However, they are based in Canada. I thought this would be a great stock to cover since I've made a lot of videos on Energy Transfer, and I looked for the stock and there aren't a lot of research videos on it or any kind of stock analysis videos on it. So if you enjoy the video today, don't forget to hit the subscribe button for more and hit the like button if you like the video. Let's get into it. This is from Enbridge's annual 10K report. Enbridge is a leading North American energy infrastructure company. Our core businesses include liquids pipelines, which consist of pipelines and terminals in Canada and the United States that transport and export various grades of crude oil and other liquid hydrocarbons, gas transmission and midstream, which consists of investments in natural gas pipelines and gathering and processing facilities in Canada and the United States. Gas distribution and storage, which consists of natural gas utility operations that serve residential, commercial, and industrial customers in Ontario, Quebec, and renewable power generation, which consists primarily of investments in wind and solar assets, as well as geothermal, waste, heat recovery, and transmission assets in North America and Europe. Enbridge is a public company with common shares that trade on the Toronto Stock Exchange and the New York Stock Exchange under the symbol ENB. We were incorporated on April 13, 1970, under the Companies Ordinance of the Northwest Territories and were continued under the Canada Business Operations Act on December 15, 1987. As of recording, Enbridge stock currently trades for $41.82. The 52-week range for the stock is $32.85 to $44.14. The dividend yield is 6.49% annually. The PE ratio is 20.4, and the beta of the stock is 0.91. EPS is 2.05, and the market cap is $91.129 billion. Some of the analyst ratings, along with some of the stock price targets for 1 year out. Obviously, the median is $42.94 and the average is 43.6, with the low price target being $38 and the high price target being 50.11. The current price, again, 41.82. So most of these are expecting the stock price to increase a year from now, but not by very much. This excerpt from the annual 10K report talks about how Enbridge plans to extend their growth. They say the cornerstone of our growth lies in the successful execution of our slate of secured projects, currently $24 billion through 2028, on schedule at the lowest practical cost while maintaining the highest standards for safety, quality, customer satisfaction, and environmental and regulatory compliance. For a discussion of our current portfolio of capital projects, refer to Part 2. Item 7. Management's discussion and analysis of financial condition and results of operations. Growth projects, commercially secured projects. In the near term, we will be focused on closing the U.S. gas utilities transactions and successfully integrating each utility. Beyond that, we will continue to seek to identify additional high-quality growth opportunities across all our platforms. We will remain disciplined and deploy capital towards only the best uses, prioritizing balance sheet strength, investment in low capital intensity growth, and regulated utility or utility-like projects. We will carefully assess our remaining investable capacity, deploying capital to the most value-enhancing opportunities available to us, including further organic growth, complementary accretive tuck-in acquisitions that improve our competitive positioning, or further strengthening of our balance sheet. Another really interesting thing to show in this video would be an illustration of the liquids pipeline along with all of the assets that they own in an actual map to kind of give you a better idea of where Enbridge operates and how they make their money. Essentially, they're moving this oil all across wherever it needs to be in the United States and Canada. you can see too, what I found really interesting was actually that this pipeline in the north is not connected to this bigger pipeline infrastructure here. It looks like they have one pipeline that goes from Norman Wells, Canada to Zama, Canada. And that's way up in the north. So I don't know if that pipeline is ever going to be extended out into anything else, but I think it's really interesting that they have such a large pipeline. I didn't think it went all the way to Texas. I thought maybe initially it would just be they were primarily there and then they kind of, had a little bit going into the United States, but they have a really extensive infrastructure that goes across the United States and into Canada. So, I mean, it's really quite interesting looking at this diagram and kind of understanding the amount of oil that they have to be moving. Stated statement of earnings for Enbridge year ended December 31st for 2023, 2022, and 2021. One thing I want to talk about with Enbridge specifically is that if there's less of a demand for petroleum, they're going to make less money. And you could see that probably the most in 2020 and end of the end of 2019, whenever the periods where COVID was, that's when Enbridge, Energy Transfer, a lot of petroleum companies were not doing well because global demand fell so much and there wasn't a need to move as much petroleum because people, one, they weren't going into their office, so you didn't even have to heat the office building if nobody's there. And for two, they're not driving to their office. And all of the other things that power us when we're actively going places and the demand for that energy. So when there's lower demand, Enbridge is going to make less money. But as you can see here from the consolidated statement of earnings, they've been able to, I mean, I would say pretty consistently have good EPS. I mean, 2022 looks like it was kind of a bad year for Enbridge, but you also have to just wonder if that was because of their operating expenses being so much higher that year. Particularly if you look, their commodity costs were way higher, and so were their gas distribution costs. Their operating and administrative was pretty in line. That's been consistently growing every year. Depreciation and amortization was not as high as 2023. Their impairment of long-lived assets, kind of irrelevant. Impairment of goodwill is pretty big too. Operating income looks like it's grown in 2023. 2022 was not great. Again, not a great year. Um, and then, Enbridge's real thing that they have to do is strategic acquisitions. This is a very slow sort of business where you can make a lot of money if there's a high demand for oil because there's not a way to get into this business quickly, which is why I really like these types of businesses. And the only thing I will say that I really do not like about Enbridge so far is the fact that they are a Canadian company because that means more regulations. And I would prefer like an energy transfer usually because there's going to be less regulation, but Enbridge has an entirely different pipeline. So there's probably an entirely different set of customers or group of people that are wanting to buy their oil or pay for their services. And they also said they do geothermal and solar as well. So I think Enbridge is a really interesting company. And we're going to do the valuation later, but I just wanted to show you guys the consolidated statement of earnings. You can pause this if you want. You can take a look at it, see what you like, what you don't like. Um, as you can see, too, one thing I notice is that there seems to be a big trend of their interest expense increasing. It's kind of expected with rates increasing as well. And also, this business is a heavily debt business, which I'll talk about in the DCF valuation, but I believe it's around 41 or 42% debt financed. So, according to Enbridge, they've increased the dividend for 30 consecutive years. I think this is awesome as a dividend investor. The yield is obviously high. A 3% increase is nothing to laugh about. It's obviously smaller of a compound annual growth rate than some of the other stocks we've covered, but the starting yield is really high, and I think that they're returning a lot of value back to the shareholder. And I like I like the dividend a lot. I like that there's 30 years of increases. I think that that's awesome. Here we have some of the different ways that Enbridge makes revenue. Obviously, the biggest is going to be their energy services. Second is going to be liquids pipelines. Third is going to be gas distribution and storage, gas transmission and midstream, and then their renewable power generation. I kind of like how they break down their revenue into these different segments. I think it helps to kind of understand better. One thing I want to say too is by having all of these different kind of segments on what they have, it kind of shows that they're sensitive to, let's say, renewable energy becomes more lucrative or there's a higher demand for it, they're going to make more money from that segment. So they're kind of a diversified energy company, if that makes sense. It's very similar to Energy Transfer, but it's almost like the Canadian version, which I find very interesting. And I believe that they make more money and their market cap is higher than Energy Transfer as well. Going to be the modeling portion of the video. And prior, I had just been doing a weighted average cost of capital for companies based on what I found online. I didn't like that approach as much, so I decided to actually break down the cost of debt, the cost of equity using CAPM, the total percentage of debt and equity financing. As you can see, like I talked about before, they are 41.49% financed by debt, which is pretty typical for this industry, actually, the energy utility industry. And through that, I was able to find this working average cost of capital of 5.69%, and I have plugged that into our model as the discount rate. Gone through the weighted average cost of capital, and that is obviously our discount rate right here. We can now go ahead and value this company. And one thing I found really interesting is that the cash flows are very sporadic and almost seem random year to year, probably because they're buying new pipelines or different things are happening with commodities or there's disputes over what pipes they can have or changes in negotiations of what people will pay. So from that, I find it very interesting that with our model, and also I want to say this was the trailing 12 months figure. This is not the end of year 2024 figure. So keep that in mind with the model. This model for this particular stock might look a little bit janky. But what I find really interesting is if you even put like a negative 0.5% growth for the next 9 years, the stock is still a buy, still $3 undervalued. If you do negative 1%, the stock is literally 1 cent off from the stock price. Now, I think the cash flow is going to grow on average 3 to 5%. And if it grows at 3, which is my lower bound figure, then the stock's worth $70. If it grows at 5% a year, the stock's worth over double what it's trading at now. Now, this is not financial advice. Obviously, my model probably has flaws like every model does because, you know, nobody has a perfect model. You'd have to account for everything and have like insider information. But based off of what I am modeling, the stock looks really good. Um, I'm thinking I might put a little bit of my own money down on this, but again, do your own research, guys. I just found this really interesting that there's a company so similar to Energy Transfer, and it's also probably undervalued. And it makes me wonder if maybe it's just because a lot of money is in treasury bonds or the risk-free rate, and maybe that's influencing what's happening here. I don't know, but I find it very interesting that the stock is this undervalued with a 5% growth rate. And I understand that A 5% growth rate's very, very bullish. But even if you do like a 1.5% annual growth rate, the stock is still very undervalued and it has a really good dividend yield. So I might be looking for this to kind of add to my portfolio, even though I don't love that they're Canadian because of all of the regulations. I think this is not a bad company, though. Let me know what you guys think of Enbridge. Let me know what you guys think of the stock analysis, what you want to see more of, what you want to see less of, which parts you thought were interesting, which parts you thought weren't. Hit the subscribe button if you enjoyed the video. Hit the like